My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to save you a little money. My job, not just to entertain, to educate. Put days like today in context, and you need that. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. Look, we have what I call toppy action, not bubbly action. Toppy. Easy to get these confused. A top is much less devastating than a burst bubble. One glance at the averages tells you that something is wrong right now. Dow sinking 405 points, S&P plunging 1.02%, NASDAQ plummeting 1.65%. Now, we start off weak, and then unlike much of the time since the market began to rally in November, we actually then finish even lower. It had been the opposite pattern. Some stocks managed to buck the trend, of course, but most can't, and that is classic toppy action. Bubbly action, on the other hand, is when you go straight up and then straight down, with the only respite being wild short squeezes on the way down. We saw bubbles in 2000 and in 2006 and 2007. We saw a ton of toppy action in the 90s and the 2010 to 2011 period. Of course, 2000 was all about the dot-com bubble collapsing, dragging down an entire generation of investors who put their money in bogus internet companies with stocks that went into free fall. Most of these people never came back to the stock market. Then in 2007, we had the bursting of the housing bubble. Lenders would give anybody a mortgage because they were selling these loans to third parties who repackaged them as mortgage-backed securities. Then they rolled them in increasingly abstruse derivatives to hide the risk. When the housing bubble collapsed, we got a financial crisis that nearly brought down our entire economy. The first one, the dot-com implosion, destroyed confidence in the stock market for at least a generation, maybe permanently. The second one was systemic, destroying some major financial institutions and leading to the Great Recession. That was truly a horrendous bear market. Now, those were bubbles. Right now, we've got nothing like that. But I'll admit that the market feels toppy, which is worse than frothy and therefore not great. What's the problem here? More accurately, what are the problems? Exhibit A is Tesla. The electric car company saw its stock top out at $299 last year. It's now down to $180. It was off another $7 today. Now, that was one of the magnificent 7. With any other company, we call this a disaster. Tesla gets a partial pass because of Elon Musk. Oh, but it's not in good shape. Why? Okay, Tesla sales are terrible in China. Chinese automakers look, they're putting up, they're decimating everybody's numbers all over the globe, and they're hurting Teslas in China. By the way, they also just got hit by an arson attack and it shut down the plant in Germany. They created a pickup truck that seems stillborn, too expensive, not utile. The competition from China is a serious problem. Without high tariff or import restrictions, you can't keep these cars out. And if you're trying to compete with them in China like Tesla does, forget about it. Making matters worse, electrics simply aren't taking over the world like we thought they would, even with Biden's subsidies. Oh, and if Trump wins the election, you better believe those subsidies are going to go away fast. So not a great time to be a Tesla shareholder, even though, as I still believe in Elon Musk and believe that something good can happen, just not now. Second, sadly, in this tale of woe is Apple. The long knives are out for this company practically every day now. Like with Tesla, China's become a problem. The iPhone may be just too expensive for the troubled economy. We're hearing from a questionable source that Apple's phone sales are down 24% in China this year. I emphasize questionable. This is on top of the many negative stories about how Samsung has a now more AI-infused phone, got that from Best Buy, and the Vision Pro has already lost its mojo. That's from various press reports. Look, people are constantly predicting Apple's downfall, and over the long term, they end up being proven wrong. Short term, though, the flood of negativity can really hurt the stock. I always say own Apple, don't trade it, because it's too hard to sell the stock at the top and then buy it back at the bottom. But if you think you can pull that off, be my guest. I've made very, very big money from my travel trust by buying and holding after doing my homework. I'm not changing now. Could it go to 160? Of course it could. Third sign of a top, the insane action in the shares of Super Micro Computer. Now, we had founder, chairman, and CEO Charles Liang on the show at the end of January when this AI stock and Nvidia partner stood at $495. 2 weeks later, it had doubled. Now, that's a parabolic move of the first order, and those moves are terrifying. They almost always end badly. The stock roared again when we learned last week that Supermicro was being added. Terrible timing to the S&P 500. Took it up to almost another 20% yesterday as people tried to get in ahead. That is idiotic behavior. Idiotic. Supermicro did not deserve this move, and it's a dreadful sign because it's the frothiest stock in the entire stock market. Fourth, the most salient part of the tech space is enterprise software. And within enterprise software is a segment called DevSecOps, a combination of development, security, and operations software. That is the hottest software segment there is. And GitLab, which reported last night, is the poster child for DevSecOps with a big artificial intelligence tie-in. Oh, it reported a terrific, magnificent quarter, but gave stunningly weak guidance. The analysts badgered and badgered management to no avail. They wouldn't even say it was a conservative forecast. GitLab stock fell more than 20% today, and honestly, I'm surprised it didn't fall more. Fortunately, it wasn't as horrendous as Snowflake, which lost its brilliant CEO, Frank Slootman, last week and gave a very weak forecast. That one still can't find its footing. $234 stock goes to $166 with still no sign of a bottom. Then again, Workday and Salesforce had good quarters with no big resignations, and their stocks are still being hammered because the whole group's going out of style rather rapidly. Fifth, there's a company called Celsius, Cramer fave beverage company, heavily shorted stock. When Celsius reported a terrific quarter, the shorts immediately put out stories arguing the numbers weren't real, so the stock fell. It caused a quick and terrible panic. But it wasn't enough to keep the stock down. There is a 20% short position. The shorts were what I call operating on it. Next thing you know, Celsius is up 20 points in a straight line over a couple of days. Again, though, that is toppy. More toppiness. How about when you get stocks like Target and AeroVironment soaring? Target up 18 today, AeroVironment up more than 36. Target rallied because inventories were down. It's revamping its loyalty plan. AeroVironment's winning because Uncle Sam's finally embracing its cheap drones that they've been, and they're very useful in Ukraine. Then there's the action in Bitcoin. As long as people thought Bitcoin would be used to buy things and pay people, there was always a ton of volatility. But once the exchange-traded products got rolled out, that eliminated the source of tension that came from ever having to sell this stuff for cash. The bears didn't understand that when Bitcoin stops trying to be a currency, it would actually become much more popular, and that's what's happened. No more volatility. No disturbances from NFTs, whatever the heck those were. Just straight up. Of course, the monster move in Bitcoin is toppy as all get out now that it's hit its old high. But you have very smart people like Michael Saylor, the CEO of MicroStrategy, selling $600 million in convertible bonds to buy more Bitcoin. Hey, look, that could prop it up. I don't know. I always find it curious, though, when someone announces their intention to buy something without the slightest degree of caginess. It's kind of like he wants to walk it up or something. Now, against all of these signs of a top, what do we have aside from the rotation in inexpensive stocks like the banks? Priscilla, you know the answer. We have Nvidia. You know how I feel about Nvidia. That said, I'm not oblivious. Oh, yes, we did have CrowdStrike report a terrific quarter after the close. Cybersecurity still has mojo, or at least this one does. It went up way too much for my taste. Again, I don't like stocks that scream parabolic, because then they can be parabolic and then lead to big declines, even if they're good. Here's the bottom line. Toppy action ends only when they get to everything and everyone, and that does include Nvidia, even as I can't think of a reason for it to come down and we're doing nothing with the trust. And that's the real oddity. It doesn't matter. When the market gets toppy, nobody needs a reason to knock down high-flying stocks. It happens all by themselves. Mike in Illinois. Mike.
Jim, how are you?
I'm doing well, Mike, trying to figure out a very difficult market all of a sudden. How are you doing?
I'm great. Thank you to you and Jeff and the crew for all you guys do for us. You're
Jeff's
all great.
fantastic.
And I am a club member, and I've been watching for many, many years. Listen, I own some Eaton. I bought a little bit today on the close because I thought the market was down a lot, but I'm wondering if I should maybe buy some more if it's down again tomorrow.
Jeff and I were talking about buying more Eaton. We feel like it's got to, because we have such a great basis on it. We want it to come in a little more. I think you should wait when we do. I think just follow our bulletins. It's been a real winner. And thank you for being a member of the club. We've got some good ones. Let's go to Jerry in Missouri, please. Jerry.
Hey, Jim. Thanks for taking my call.
Of course.
Jim, it seems that if a company has anything to do with electric vehicles, its stock is cursed.
Yes.
Even though the best-selling car worldwide is the Model Y.
Correct.
It just doesn't seem fair. And I know that is why Hertz is in the tank, but is Hertz a broken stock or a broken company?
I actually believe it's a broken stock. I have great confidence in Stephen Scherr, who was the CFO at Goldman for a long time and did a fantastic job. The stock is very daunting, but the company isn't. And it's a great brand name, and it's come down so much that I think it's tempting, but I know that you fight the tape with your own peril right now in this market, but thank you for the kind words. When the market gets toppy, nobody needs a reason to knock down high-flying stocks. It happens all by themselves. Well, Mad Money tonight, the surge in interest around makeup products is an anomaly. It's not a quirk. It's not even an idiosyncrasy. It's an oddity. Yes, oddity tech. And I've got the CEO. Then, after an unusually strong start to the year, how worried should we be about this recent market pullback? I'm going off the charts to find out, and it is disconcerting. And I've got an off-the-tape company whose name you might not recognize, but I'm finding out if it has a growth strategy that still has the meat. I'm talking to the CEO of Arby's owner, Inspire Brands. Yes, they own Dunkin' too, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.